Well, g'day there traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me on this Monday afternoon market recap. It is Monday the 2nd of October 2017. Again, we are seeing collectively these markets push to new all-time highs. It has been a tremendously profitable period for a lot of traders who are actively trading the financial markets. You can see on the Dow Jones Industrial Average up another 152 points during today's trading session. You can see also that we have had retrospective entries at 22,197, 22,292, and most recently triggering today was 22,444.24. Pretty funny, all the twos and fours in that third subsequent entry, but again, very, very profitable to see this bullish trend continue. Volume wasn't really behind the breakout today. However, the individual candlestick is very close to that of a shaved top long day Morobozu candle, a very, very minor lower and also upper wick, showing that even towards the close of Monday's trading session that the Dow Jones Industrial Average is exceptionally strong. Also, if I change to my template of these exponential moving averages, you can see also how price once again is trampolining off from the rising 10 exponential moving average. On top of that, you can see that the ADX has turned up and also the CCI is holding very much so above that positive 100 reading, indicating that the trend is legitimate, it is sustainable, and we are to see this market continue to trend. So if you do have any open exposure in the diamonds, for instance, the DIAs, you should be sitting there with a very big smile on your face at this particular juncture. If I also change into the S&P 500, you can see that this more or less triggered on Wednesday last week at 2,511. We saw the breakout Friday last week. Monday, we closed and we really continued above Friday's high. You can see we closed up just under 10 points, but again, this trend is continuing again, pushing off these rising exponential moving averages. You can see that we are somewhat overbought on the oscillators, but during a bullish trend, we can remain like this indefinitely, and there is really no reason or no warning whatsoever outside of the fact that the RSI itself, the relative strength index, is getting back up into those extremely overbought readings. But again, if we are to see a slowdown, it is only going to be a temporary slowdown, as once again we see those exponential moving averages catch back up to price and then eventually propel them back up into new higher levels as well. The ADX has turned up in the CCI. This is printing very close to 200, so a very strong, very healthy market, very strong and bullish tone or undertone to the market, which is continuing through to the S&P 500. Now, the NASDAQ was the last of the three major markets or main closely followed markets to actually break out. You can see today we had a little gap up. We moved negative intraday. However, the buyers came back in. You can see this lower wick on Monday's candlestick, and we closed up 20 points. This looks like a valid breakout. If I show you the ADX and the CCI, this is what is, I guess, favorable behind this market more so. 156 and also the ADX is definitively turned up as well as we are breaking above the highs which we established in July 2017. We went through some form of a short-term resting pattern. We saw, of course, these markets collectively pull back. We did, however, establish once again another higher low, and we've just broken out to another higher high. So this is the textbook definition of a major trend continuation. If I take this also dialogue a little bit further, you can see the Russell 2000, it is still not slowing down. Monday today, a massive bullish days candle. I mean, just up under 20 points, another long day shaved top Morobozu candle. We closed right at the highs, and the Russell 2000 is giving us no signals outside of volume that this has really got anything to be sort of concerned about whatsoever in terms of the bullish breakout. Yes, we can pull back down and retest this pivot coming in at about 1,450, but at the moment, these exponential moving averages, you can see for yourself that we are moving absolutely parabolically. A very strong upward breakout. It has been a long time in the making since establishing once again that high towards the end of July, and the Russell 2000 is confirming what is occurring on the Dow, the S&P, and also the NASDAQ. If I transform this or continue this into the transportational average, you can see also all five markets that I've recapped have just broken to new all-time highs. So according to Dow theory, especially with the transports relative to that of the industrial average, we are continuing very nicely. Markets are in agreement, and we are seeing the continuation of this bullish trend. So if that is the undertone of the market, if things are healthy, things are green, things are positive, what does that mean for our individual top 12 trade list? And really when it comes down to, I guess, the majority of these stocks, these trends, or at least these stocks, are continuing to trend. You can see retrospectively again, beginning 206, 209, 242, 246, 250 I skipped out of, but the next trigger on Boeing Airlines is 260.78. It looks as though we are creating another stair-step consolidation, which is going to break to the upside. Now, as I just mentioned, a stair-step consolidation, I need to bring you back into the S&P 500 because I spoke about this over the weekend, and I was saying how this looks exceptionally like that of a short-term bull flag, and you can see if it is, and if it is justified as a bull flag, we have now broken out of it, and we are continuing continuing. So just another little element of technical analysis thrown in there. Baidu today hit our target at 248.46. I was speaking about this over the weekend, and I said really Monday, but really assuming Monday, or between Monday and Wednesday, that we would hit 248.46. You should be out of Baidu. You should have cashed in pretty nicely on this trade. 234 and 236 were the two entries. We also had a third entry coming in at 239.55. So whoops, I just moved that trigger. I was just simply trying to move it over and bring it onto one screen so you can see this for yourself. But roughly 240 was that third entry. We hit our target at 248.46 today. You should be out of this. We have a doji candle reflecting short-term indecision at this pivot point. Allow Baidu a number of days to build structure until we can come back with another pretty, ideal or legible sort of trade setup moving forward. Caterpillar also is still holding its stair-step consolidation. This has been a tremendously profitable trade as well. Going back to about the early stages of August, 115, 116, 116.77. You can see all these green triggers on my screen. These are all entries to the upside. So I'm not sure exactly where you entered, but regardless and irrespective of that, this is a very healthy trend continuation. And even though this is somewhat short-term moving sideways, it looks as though we are setting once again another stair-step consolidation, which is eventually going to break out to the upside. 126 is the bullish entry on Caterpillar moving forward. COP again hit our target last week. This is what I was speaking about again 2 weeks ago in Pro. We need to develop structure. Now fast forward to Monday, we have another engulfing candlestick at resistance. This is very bullish, but at the same time I'm expecting this to hold around this $50 per share level for another week or so until we get a lower bound as well, and also potentially a few more upper wicks, which are really going to set the tone for the inevitable breakout above roughly 51.06. So pay attention to COP. It's not ready yet in my own personal and professional opinion, but it is going to be another trend continuation in due time. CVX was another stock which hit our target at 115.40, another subsequent entry at 116.42. If you had your stop at 115.55, I mean, you might have been triggered out of this, but if you had a looser stop, you were still most certainly in this. We're at 117.43. My target on this is 118.94, but if you look back retrospectively, you can see 113, 110, and 107 was where we really started to develop those initial positions on CVX. A pretty decent move there as well. Now, if we move into Google, this is a little bit troublesome. We've been speaking about the bullish breakout at 952. We've also been talking about the subsequent bullish bounce, above 959. We are trading at 967, so it is slightly profitable. We've had to endure sort of a somewhat, slow period in Google, so to speak, but it's looking to actually shake loose. This is the first time since we established the gap back in July where we're coming back up to retest the bottom of that open gap. My target on this is 990 and also $1,000 a share, but I just want to point out today on this particular candlestick, we have that of a bearish piercing pattern. It's not a textbook pattern. It was looking very much so like an engulfing pattern intraday, but again, you can see this lower wick indicating that buyers are still willing to jump into Google. This is as the markets break out and as these oscillators are still relatively favorable, so to speak, to the upside. So Google is showing a little bit of resistance at this open window, but it's still my assumption that we are going to close the window up at 990 and even potentially move all the way up as high as about $1,000 per share on Google. Let's move into Goldman Sachs. Goldman Sachs today was the second stock in our list which hit our ultimate target. 239.95 was our target on this trade. Our entry was 229.60, so another really nice breakout. What I was speaking about over the weekend was this gap here, and again, I was really sort of expecting for the first half of the week for Goldman Sachs to hit our target. I thought it would make it very, very quick. I made that very, very it was very open and public about that. We hit it today. The first trading session of the week, we hit it at 239.95. So a pretty decent trade there. That's about $10.40 of intrinsic value into those call options. So a pretty decent trade, and it does help us out after we had to again endure a sideways market move as we saw Goldman Sachs once again push on back down into this macro support. But right now you should be out of Goldman Sachs because we are most likely going to slow around this pivot at 240. Allow this a couple of days to sort of rest around this area to build that upper structure, which is what I was alluding to in the analysis of that previous stock, and then we'll have a trade opportunity in maybe a couple of sessions time looking at an ultimate target up here at 253.35. Right now though is not the time to be chasing Goldman Sachs. It has gone parabolic and it has been another tremendously profitable trade. Now moving into IBM is still grinding higher. We've been sort of following this trade from about 143 and 144. This is a counter trend dead cat bounce. My target is up here at 148.79. I'm a little bit reluctant to say that, with good confidence anyway, that we're actually going to hit this target, but even Monday's candle today, we saw a nice little pop up about $1.60, a nice bullish candlestick. But I mean, look, if you're still in this at 143, 144, I would be more or less moving my stop up even below Friday's candle just to make this at worst a break-even trade, if not locking in profits if you entered at about 143.46. I still think we're going to roll over. I do have a little bearish trigger here at about 142.70, but at the moment I'm not really paying all that much attention to it. It's sort of an insurance policy there if the market does reverse up and around these historic highs. I think IBM in our top 12 list is going to be one of those stocks which shows the first signs of weakness if the market is to actually begin to crack, which at this particular point doesn't really look like it's actually going to happen or formulate. So moving forward into Netflix hasn't really produced all that much for us, has it? I mean, as I say that, we had a pretty decent trade from 171 and 177, 180 all the way up to 189. That was a tremendously profitable trade, almost $20 from those original entries, which is fantastic. But since we hit our target, and this was a very profitable trade, I must admit, up to 189, we've absolutely sort of like rolled over, I guess, from resistance. The problem is that we're in no man's land, and I don't like this trade. You can see this dotted line on my screen. This is technically a bearish trade. It makes sense to trade this bearish if you're just applying the actual technicals, but if you're using a little bit of, I guess, wisdom and experience that you develop over the years of trading financial markets, this isn't really a decent trade. The reason why is because the market is still bullish and Netflix is still, relatively speaking, obeying and holding up above its exponential moving averages, which is indicating that the short-term trend, although technically we are sort of oscillating sideways, it is still relatively favorable. But if I bring it back and move out or zoom out another fractal on the big macro picture, we're still trending bullish. You can still see we're holding very much so above the rising 100 and 200. I don't have a trade open on Netflix. I closed my positions at 189. I'm simply leaving it and waiting for a better opportunity to leg into that particular stock. Tesla's been one of those stocks which has also reversed from that resistance area. It's back down at support, and it needs a little bit more time to reset until we can start jumping into another, at least formulating another pretty decent trade set up on Tesla. Now, going back into Apple and Amazon, which I haven't touched on, Amazon is still yet to get moving. We flinched above 966.93. We're sort of, I mean, when I apply the analysis to that of, I guess, Amazon and compare it to that of Goldman Sachs, I can see a lot of parallels in the actual chart, even though they are sort of occurring at different locations. What I want you to take away is that we are essentially drilling into and really uncovering that of macro support. If I show you the picture on Amazon, you can see these pivots between about 925 and 950. Every time we come down into this level, we subsequently bounce. You see these movements, these oscillations back up into higher prices, albeit short term. That's what I'm expecting to happen on Amazon moving forward. And the reason I say that is because the markets are still bullish, they are still favorable, and these oscillators are only just beginning to actually cross bullish. You can see the Stokes is trying to cross up. The RSI is very neutral, and the MACD is very neutral as well. So this looks as though it is a channel consolidation. I'm still long-term bullish on Amazon, unless, of course, we start breaking down below 918. If we break 918.90, watch the bottom fall out of Amazon. It's going to reverse very, very quickly. And also, if I take this full circle and move into Apple, this essentially looks like a retest of the pivot. I made this clear over the weekend. 155. It looks as though we've made a reversal. We've come down, we've stabilized that support, and this looks like a bear flag. So different or polar to what I was talking about for the S&P 500 making a bull flag continuation. On Apple, it looks as though we are setting up that of a bear flag, which is going to break to the downside. You can see on my screen here, we're retesting this pivot. So I don't necessarily have a trade on Apple at the moment unless we break 148, which again is counter to the direction of the market itself. But Apple is looking relatively weak, so to speak, and I want to make that relatively clear. It has been one of those stocks which hasn't really, worked out all that well, but compared to the majority of other stocks we've got into, it's been a tremendously profitable period. Apple has been one of those outliers along with Amazon. But I suppose, and what I'm expecting is that although it has been short-term unprofitable for us, it is going to provide us with a pretty decent trade. And I'm assuming there is a high degree of probability that that trade or the directional trade is actually going to be bearish, which may come as a little bit of surprise to people listening to this piece of analysis. Not enough analysis yet, but as we see this bullish bounce, look at the volume. Volume is trickling out of Apple. And again, it looks as though we're retesting this pivot, not as support, but as a potential back test, right? Or a back test of what may be some form of a neckline on Apple, and I just wanted to make that very clear as well. So have a pretty decent night, everyone. Whether you're watching this Monday evening or pre-market Tuesday, I'll be back to recap the markets later on. I wish you all another tremendously profitable month for the month of October. If you have any questions, email me, success@pivotpoint-trading.com. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.